Hey everybody, man, this your guy, Mr. Chauncey Reed, y'all. And you already know, man, as you hop on, go ahead, drop your city, your state, where you're actually hopping on from. So hopefully we can add some value to what you have going on in your life. Hey, today, man, we wanted to do the financial literacy recap of days 7 through 13. Okay, so I tell you now, man, welcome back, man. In this video, we just want to go ahead and do the recap, ladies and gentlemen. So without further ado, let's dive into this thing. On day 7, we talked about how interest works. See, we explored the differences between simple versus compound interest. Some of your key takeaways from day 7 that I want you to make sure that you understand is simple interest, it only grows your principal. While compound interest, it grows not only your principal, but it also grows the previously earned interest, meaning now your money is doing the snowball effect over time. Okay, so on day 8, we just did a quick little intro to the credit. All right, so we introduced you to some of the basics of that. So some of the key takeaways were understanding that credit is borrowed money, but you got to repay that back with interest. See, understanding that a good credit score tells lenders you're reliable, helping you secure better rates and opportunities, things like jobs and so forth like that, insurance, right? So on day 9, we talked about some credit score basics. See, we dove a little bit deeper into the credit scores. See, some of the key takeaways was understanding that there are 5 main factors of your credit score, which are payment history, the amounts owed, the length of credit history, the types of credit, and of course, understanding that there's new credit. See, understanding that you manage these wisely, and it'll help keep your score high. On day 10, now we start talking about managing credit cards, okay? So, and not just managing them, but understanding that we have to manage them responsibly, ladies and gentlemen. So, some of the key takeaways on day 10 were paying on time, not exceeding your limits, and only spending what you can afford, right? This helps you avoid debt and keep a healthy credit profile. On day 11, all right, we discussed various loans, things like personal loans, auto loans, student loans, and of course mortgages. Some of the key takeaways that we want to make sure that you understand here was each type has a different term and rate. Always read the fine print because you don't want no surprises or anything like that down the line. All right, so with day 12, we introduce you to 2 ways to tackle debt. Some of the key takeaways from that was the first one being the debt snowball. This targets the smallest balance and it helps you get that motivational boost, right? While the debt avalanche, it targets that high interest debt and it helps you save more money overall over time. Okay, on day 13, now we dove into talking about starting your investment journey. This is big, ladies and gentlemen. Of course, we understand that. Some of the key takeaways was it don't matter how small, but you got to make sure that you're consistent with your investing in things like stocks, bonds, or funds, because it can grow significantly over time, especially if you let compound interest do its thing. So, man, I hope you all are enjoying this financial literacy month and the breakdown that we're sharing with you all. So, that's a wrap for this week, okay? Remember this, some of the key concepts from interest, credit scores, debt reduction, and early investment. Make sure you form a foundation of smarter money choices, ladies and gentlemen. Keep learning, keep saving, and we'll see you in the next video. For more financial tips, hey man, don't forget to follow us, like this, and share this with somebody who this could help benefit, y'all. You already know, man. Y'all have a great day and a blessed week.